Hey guys, NeoFX. It's May 27, 2020. We're going to go over a nice little setup, which is probably going back to some feedback I've had on a lot of people telling me, hey, do something a little more short term in terms of a trade and time frame. So I think this is a good example. I just sent this out. This should not take long at all to materialize. I'm guessing probably in about a day or so, and that's as little of a time frame as I'll actually go personally. But so it is my version of a scalp trade basically. So this is the pick that I just sent out to my subscribers. Again, it's May 27th. It's about 11:40 a.m. here in Texas, and here's the live chart. All right. So what do we have? I think it's a great little setup. Kind of tells you a little bit of what's going on. So we've had the Euro Swiss, needless to say, on an unbelievable, just crash here the last 6 months or so. Okay, 1.1, 1.05. I mean, that's 1,500 pips fall. Well, what do we have? And this is how we're able to capitalize. This is why trend lines, I always say, are very, very important, guys, because they really tell you when things are about to start. When the fun begins is the way I put it. That's when the fun begins. When something is no longer looking right and changes all of a sudden. And trends, I mean, you can tell without the trend lines. You should be able to by now. But if you follow the rules, as I always imply, okay, we had lower lows, lower highs, lower lows, lower highs. I mean, a definite downtrend, but obviously not as steep as we've been here. So here it was this type of position that you sell and hold until moving averages or price action tell you otherwise, and you would have made the killing here. But since we're trading setups from and that's a 6 month trade, by the way. So I know a lot of you guys want to be short term, in and out. That's fine. With that said, I still will not chase the daily volume. I've told you that time and time again. I was emailing back and forth with one of my subscribers, Frank, and he asked me personally to see if I could send him, 2, 3 signals a day. And, he knew going into this that it's not really what I do. And we had a very, very productive conversation as to why I don't do that, because a lot of the daily noise is exactly just that. It's noise. It does not work in the long run. You'd have to have a very, very high success ratio, win ratio to do that, because if you're getting in and out of the market 8, 10, 12 times a day, guys, you're paying a shitload in commissions, okay, in spread, first of all. And then even if you write half the time, you're still down because of those high fees, okay? You get taken out for the round trip, they call it, right? When you buy in, you pay a spread. When you exit out, you pay a spread for profit. And if you get stop loss, if you hit your stop loss, you pay a spread. So let's see what we have here. I think this is something that might be more up your alley, Frank, hopefully. It's a shorter time frame setup. But why did I do this? Why are we buying this? Here's the pick. Why are we buying this breakout? Well, it's very simple. First of all, I knew something was about to happen here because we clearly broke out of this downward trend line. So we know that. That is your first sign. We've talked about that. That is your very first sign that I look for. What do I always then say? Well, typically, after a breakout, don't just buy right away. Okay, I know the traditional wisdom out there is, hey, you break the trend lines, or you go above a certain moving average, which again, that depends on what time frame you're looking at, because this is what a moving average on a 30-minute looks like, and this is what a moving average on a daily chart looks like. I'll show you here in a second. So as this loads, okay, let's try a 4 hour. All right, I don't know what happened there. So okay, so 4 hour chart is as small a time frame that I'll look at. What do we have? Major breakout, comes back, and what do I say? Let it come back and test the backside of that trend line. Okay. The reason I did not get here, because if you draw our fibs from low to high, we were at a beautiful, beautiful 50% pullback. The problem is this: on these smaller setups, you can have some wiggle room on larger time frames. When you're going for, like we go for 1,000+ pips on a trade sometimes, you can have some wiggle room there. You could enter this and give it more room for it to possibly come down so it doesn't stop you out before then resuming our trend, right? But on this, I honestly thought what we're going to have, I thought we're going to have a Gartley of this A, B, C, D completing, possibly down here somewhere, or maybe the 618. It still was worth getting in, but or maybe the 76. But since those of you who go in for the shorter, quote unquote scalp types of trades, I want to get you in as precisely as possible, because those of you who tend to trade that way are not very tolerant of risk. So if we had gotten here yesterday, which was a great time to buy, because we're at the 50% pullback and at the backside, like I said, of this broken trend line, right? Great place to buy. But, I was trying to be a little bit more surgical. It never came down. Well, sure enough, we had the pop. Well, guys, not the end of the world. Now, would I have liked to have gotten in here? Of course, but it's not the end of the world. Why? Because our target for this setup is going to be at least this 1618 of this leg. So your A, B, C, D should take us here. Okay? Let me show you 1 second. Here's our pattern. One of my absolute bread and butter patterns that I've always traded. Okay, so we are bound to, in theory, go up to at least this point. I think it might go much higher than that, but doesn't matter. We want to be in and out, right? Okay, so since we have a potential target of this 10760, well, guys, it popped. We missed out on that C point, right? Your ABC. But guess what? What do I tell you? There's always another chance. It is now coming back to a beautiful, beautiful pullback level at this 106.30.35, right? And the call that went out, I told everyone, buy this 106.50 area, okay, all the way down to about 106.30 or so. This is going to be your buy zone on this pullback, because most likely, things acting a little bit funny. Sorry about that. Most likely, we are going to hit our target. Okay? We are going to hit our target. So, the ideal entry again was break of trend line. It popped right above it. Let it come back. Let it come back to a... Oh God, trading view today is just not cooperating. Okay, let it come back to the backside of that broken trend line, right? And possibly a Fibonacci level, which we have, the 50%. So the right buy on this was here at about 105.80. Okay, sure enough, it popped. But guess what? It's not just going to go straight up to our target right away. It's probably going to do some more impulse waves until then. And sure enough, we already see it. We have 1, 2, 3, 4, and we will be getting in essentially this 4 pullback to then go to 5. Okay? So this is what that will look like in a smaller time frame. Okay? So essentially our major impulse is A, B, C, D. But between C and D, right? Between our buy level and D. Well, you're going to have these other little zigzags, okay? A, B, C, D. This becomes your new A. This becomes your new, look at that, your new B. So A, B. So we are essentially now in this little impulse wave, which would be on an Elliott wave would be our 4 count, because we have our new 1, 2, 3, 4, 5. But guys, let's look at them in terms of A, B, C, Ds, right? A, B, C, D, done. A, B, C, we're right at the 161, we're right at the 618, guys. Yeah, I say we pop from here. Okay, I say we go exactly up from this point, and look where the target, the 1618 is, okay, of this mini leg. It coincides perfectly with the bigger impulse target, A, B, C, D, okay, is exactly also on a smaller time frame on this mini count, A, B, C, D. Perfect confluence. I say buy the Euro Swiss. I always like to do a follow-up on this, so what I'm going to do, I'm going to wait it out and see what happens. But buy the Euro Swiss at this 106.30 to 50 area, and we should exit for about 110 to 125 pips, and should not take more than a day or so. Okay, so to answer your questions, this is about as small of a time frame and pattern that I'll go. It's just not worth my time to stay here in and out of the markets 12 times a day, okay, riding out all the noise, making the broker rich, because I get into some pretty sizable positions sometimes. Okay, if you get in on average at a standard lot, guys, per position, I mean, even on a small spread pair like the dollar pairs, I'm paying them $30 on each side. $30, on the dollar yen buying, $30 exiting the position, that's $60. Well, multiply that times 10. That's $600 in spread, in round trip. They call it a round trip in Wall Street, because they take you when you buy and when you sell. Okay, and even when you get stopped, when you hit your stop loss, even when you get stopped out, you pay that spread. So, I mean, if you get in 10 times a day at a standard lot, guys, you're paying $500 to $600, maybe more, depending on what kind of pairs you trade, in fees alone. Okay? Now you're saying, yeah, but, what if you net 200 pips that day? Well, yeah, $2,000, minus 600 is still $1,400, but you got to be out of your mind to pay that much in fees on a daily basis. And even if you only trade a mini lot, that's $60 a day. And I have people telling me, hey, I just need to make $100 a day. Well, yeah, it's doable. Okay, it's doable. But you'd be giving up half of that in commissions. Even after your win-loss ratio, let's say you did net $100 that day, okay, in terms of realized gain in pips, well, 60 of that is going to go in spread, guys. So, trust me, fuck the daily noise. I've told you this time and time again. You want to be in anywhere from 2 to 3 days to about a month-long position. That is where the real money is done here, and it plays in your favor. The broker still will make some money off of you, but not nearly as much as they want to. They're still going to keep you in the game, I promise you. But nobody's going to kick you out for doing that. But don't play into their game. Don't go in and out of this shit every 10 minutes. I'll put a challenge out there. You bring me somebody that's in and out of the market 5 to 20 times a day, in Forex especially, that's made money in the long term, you just send me their information, because I really want to talk to them. I can almost guarantee you're not going to find anybody. The money is made on swing trading, short term to mid term. Sometimes, if you can catch some massive moves, I've been in a position as long as 3 months sometimes, okay, with over 15, 2,000, 2,500 pips on that one position. I'm not asking you to do that. I'm just saying that's where the money is made. So there's a 4-hour time frame setup. Not too bad. If this pops, we should be there by tomorrow, possibly the 29th, which would be Friday. Okay? So I hope this answers some questions. In terms of the trade itself, we had the breakout, so confirmation pullback setup. Breakout, guys, if you missed it, no biggie, because guess what? There you go. It'll come back most likely, give you another chance to get in and ride that wave up. You won't make as much as if you got in here, but hey, 125 pips is still 125 pips. All right? So we'll keep an eye on this, see what happens, and I'll let you guys know. All right, guys, so it is almost 7 o'clock in the morning, Tuesday, June 2nd. If you discount the weekend, it was essentially really a 2.5, 3-day trade. I thought it'd get there a little quicker, but here we go. It worked out very, very nicely. We bought as tight as we could on this little mini pullback, and our target was just hit. So very good trade. It's probably as short term as I'll go usually. Very rarely I'll trade news, on a 10-15 minute kind of time frame. Very rarely I'll trade anything less than 1 to 4 hours. But again, guys, what matters is to keep everything in perspective within the larger time frames. Okay, that's how you're able to get these. Very clear rounded bottom, breakout of resistance, right, which is typically manifested by a break in trend line. Okay, whether you're going up or down doesn't matter, but a break in trend line, typically a rebound or pullback off the backside, right, of that broken trend line. So past resistance becomes future support now, and then you time it, to be more precise with your moving averages and your Fibonacci's and patterns. Okay, but this is, in my opinion, as short of a time frame as you want to trade. Okay, I mean it. I will not do anything less than this. This could have gotten here that same day. A lot of times it does, but the markets have been what they've been lately. So, but here you go. Great example. Our target was just hit perfectly, and sure enough, as expected, the 1618 target will start pulling back prices a little bit. My guess is we're going to go probably further up on this to about 111 or so, but we'll see if we're going to get back in on that or not. But for now, as far as this trade is concerned, we are out with a nice little profit. All right. Thank you very much.